Morning, Mr. Luzi. So I'm gonna be going through a lesson on my strategy. So I'm gonna send you this template. My screen exactly looks like this. These are indicators. You can see these green dots, and we can see these purple dots. These are candlesticks. The market always goes up and down, up and down. So the white candlesticks, they represent people buying the market, or buyers. The red ones, they are representing simply sellers selling the market. So the market is going up and down. It's buying and it's selling. So the first indicator that I use is this green dots and the purple dots. These green dots, they help me to draw the resistance, and the purple dots, they help me to draw the support. Price as what we call resistance and support. Resistance is an area of price whereby the price will go there, meaning the candlesticks will travel to that point and they'll be rejected and they'll go back down. And then support, which is represented by the purple dots, means it's an area of price whereby the sellers, they go there and then they are rejected, then the price goes up. So it's the opposite of resistance. Resistance is represented by these green dots. Support is represented by the purple dots. So usually what I do, I take these lines, they are horizontal lines, these ones. So I mark these areas. So I'll mark this area here. You see, so this area automatically is an area of resistance. You see, price came here and it failed to go. Here it came closer, still failed to break. It came back here again and what? Fell down. Came back again and did what? Fell down. So this is a resistance. So let me mark let me mark support, because the price is now down. This purple here, this area. This area is support. Let me make it a different color. Let me make it white. This is the support. Why? Because you can see prices were rejecting here. That's why there's a purple dots here. This is support. Let me mark another support, this one down here. This one down here. You see this area, prices were coming, rejecting, coming, rejecting, coming, rejecting, coming here, rejecting, coming, rejecting. So these are the levels that I have drawn on the 1 hour time frames. These are time frames. We've got M1 to monthly, but we draw the lines on 1 hour like I do. So right now the price is here, right? Now, after you draw the lines on the 1 hour, you don't draw everywhere. You just draw the major lines where price was bouncing too much. Like if I can zoom out, I can be able to show you this area. This one came closer, this area, right? And resistance, we can see that, okay, there's some resistance here. There are purple lines here, right? And there's another resistance down here. So now, for entries now, for trading now, after you draw a few lines like that, let me zoom. These are the zoom in and zoom out buttons. Okay, this is what we have right now. After drawing these lines, we shift to the 15-minute time frame. We draw the lines on 1 hour and we shift to 15 minutes. This is 15 minutes, right? So what are we looking for on the 15 minute, right? What are we looking for? We are looking for price to go into these areas of our resistance and support. So this was yesterday. Let me give you an example. Yesterday, the price went, I'm in a trade that I'm managing on the side, but the price went here, right, in a resistance on the 15-minute time frame. Then it dropped. I don't enter when it's dropping. No, I wait for it to go back and retest. It has to go back and retest again. When it goes back and retest, when it now turns here on top here, that is when I sell this market. And you see the market went down. Went down where? Closer to the what? To the support. Now it's on the support. It's either it will reject and go back up, or it will break this support. It will break it. If it breaks it, it will be going for what? The next one here, down here. So now what am I talking about here? Yesterday, what can you see? What pattern can you see here? Look, price went up, came down, went back to test, and came down. This is an M. This is shaped like an M. This is what I call the M formation pattern, right? M formation. So you draw support and resistance on 1 hour, and then you look for patterns on the 15-minute. Okay, let me just show you an example. This is an M, right? Let's go to the previous day. What are you seeing here? We saw price going down at support, coming back in. We wait for it to go back and test, and then it came back in. What did it form here? This is a W. And what happened? Price eventually went up. Let's go back. Here, what are we seeing? Okay, we are seeing price was going up, right? It came down, right? Went back up, right? To test. Came down. It formed an M. This is an M. But this M didn't travel much. So we could have been out at a small profit or break even. It went back to retest. This is what I call a double M. You see it went back to the same level. How many times? Not 2 times, but for the 3rd time, right? And when it changed, it went down. You could have been in. Still here, you could have made little money or broken even. And then it went back to test. Look at how many times. 1, 2, 3, 4. This is the last level of the volatility 75. It usually tests once and goes down, or if it tests 2 times, it can still go down. But if you see it testing for the how many times? 1, 2, 3, for the 4th time, it means there's a big movement about to happen. So I could have been in again here for a sell, and I could have made money because it moved down. So this is a what? Quadruple M, because it's 1, 2, 3, 4 for testing. But a normal M is 1, 2. A triple M is 1, 2, 3 tests. So you can only have a single M, a triple, or a quadruple, which is 4 times. Those are the patterns you look at. Here we had a W from down here. It's once only. Let's go back a bit, I show you. What shape are you seeing here? It goes up, comes back to test a bit, goes up. This is a W. Look, these are the patterns we are looking for. W's and M's. Right? What are we seeing here? W. What are you seeing here? Price goes up, comes down. W, it goes up. So these patterns repeat themselves. We can go back. What are we seeing here? It's a W, right? It's a W. They repeat themselves. This is an M here. So okay, let me go to where the price is right now. These patterns, they repeat themselves always. They repeat themselves always. M and W. When are you looking for the M? Agree you draw your support and resistance lines. Up here, you're drawing resistance. Down, you're drawing support. This is support. So when price goes to resistance and reverses on a 15-minute, don't enter. Wait for it to go back to test that place. And when it turns again, that's a very high probability setup. You can enter. Sometimes it moves and goes back to test again for the 3rd time. When it goes back, I'll show you how you can have protection on your trade, so that when it goes back, you either earn something small or you break even, so that when it goes back and it comes back in, you enter again. So it can only go back about 1, 2, 3, 4 times. That's how 75 moves. And for it to go back about 4 times, it doesn't happen every day. Mostly it just goes back once and goes down in most cases. And in rare cases, it goes back for the 3rd time, then comes down. For you to see it going back for the 4th time, it doesn't happen usually. It happens rarely. And when it happens, just know that the price is going to go down massively. So from resistance, we look for the M pattern. From support, we look for what? W pattern. So I'm going to do another video to show you the risk management.